These are 8 top big cap stocks with large percentage gains today. While watching bullish price actions, let us inform you our review on SPWH Sportsman's Warehouse Holdings Incorporated, a major player in the outdoor sporting goods space, just dropped some mixed but ultimately positive news, with its stock rocketing up 97% today, fueled by a strong Q4 report. That's a massive jump, and whenever we see something like this, it's important to dig into what exactly is behind the excitement. First off, the company reported earnings of 4 cents per share, which absolutely crushed analyst expectations of a loss, marking a 120% increase from the same period last year. Sales came in at $340.4 million, a solid beat on the $329.6 million estimate, though still down from the prior year's figures. This wasn't a perfect quarter. Net sales slipped and same-store sales dropped by 0.5%. But a 13% after-hours jump suggests the market is feeling optimistic about the company's future, especially given those earnings and sales beats. What's really standing out here? The company's profitability is showing major improvements, with adjusted EBITDA up nearly 300% year-over-year. E-commerce sales are showing strong growth, and the fishing department has been outperforming expectations, even though there's been a broader slowdown in firearm sales. They're also making solid strides in reducing debt and boosting liquidity, which points to stronger financial health moving forward. Now, despite the challenges like rising operating costs and the overall decline in net sales, the story here is that Sportsman's Warehouse is managing to pivot and find ways to grow. Their emphasis on high-performing areas like fishing, coupled with growing digital sales, seems to be setting them up for the future. The market seems to be betting that they'll continue to innovate and execute on their strategy, and that optimism is likely why the stock shot up post-market. Overall, the 97% after-hours surge is a pretty clear signal that investors are seeing long-term growth potential. The company's efforts to strengthen its e-commerce presence, reduce debt, and focus on key outdoor segments are all signs that they're on the right track. There's still a lot of work to be done, but with the strong financials and strategic direction they've laid out, it's clear that they have the potential to bounce back and keep growing. If the company can continue executing on their growth strategy and further improve their financials, this might just be the beginning of more upside. Definitely a stock to keep an eye on, especially given this kind of volatility and the potential for long-term gains. With strong leadership and a focus on high-demand areas in the outdoor market, it could really take off in the coming quarters. Our review on TTEC. TTEC Holdings Incorporated, a global leader in customer experience technology and services, just made some waves today with a huge 52% jump in stock price, fueled by some major business developments. TTEC is known for blending AI with digital customer experience solutions, helping enterprises across the world provide end-to-end services to their customers. Its 2 main segments, TTEC Digital and TTEC Engage, focus on everything from contact centers and customer relationship management to cloud-based services and large-scale omni-channel customer care. Now, the stock's big surge is being driven by some significant news. First up, TTEC received a buy rating from Craig-Hallum, a move that's clearly got investors feeling more confident. The stock was trading at $3.27 yesterday, and with the positive outlook from Craig-Hallum, there's now an average price target of $3.50. But what really moved the needle was the company's update on the buyout proposal from TEC's founder, chairman, and CEO Kenneth Tuchman. In short, TEC's special committee wrapped up its review of Tuchman's offer to take the company private at $6.85 per share. While no action is required from non-affiliated shareholders yet, the fact that the committee is still in discussions with Tuchman, considering his offer, is fueling the excitement. Tuchman already holds about 58% of the company's stock, so this deal could have major implications for shareholders and the company's future. With 17 million shares traded today, This is one of those times when market sentiment can shift rapidly. There's a lot of uncertainty around whether a definitive agreement will be reached, but the potential for TTEC to go private at a premium price has clearly sparked investor interest. The 52% surge is likely a reflection of the market betting on a favorable outcome, with Tech's strong position in customer experience technology and Tuckman's sizable stake in the company. While there's still a lot to be figured out, today's market move shows that investors are watching closely and hoping for a positive resolution to the buyout talks. If a deal goes through, shareholders could see a nice return and Tech's position in the market could get even stronger. It's a dynamic situation to keep an eye on in the coming weeks. Our review on CRVO. CervoMed Inc, a clinical stage biotech company focused on age-related neurological disorders, saw its stock surge by 36% following the announcement of positive results from its Phase 2 BRE-WIN-DLB study. The company is developing neflamapimod, an investigational drug aimed at treating dementia with Lewy bodies, DLB, and Alzheimer's disease, both of which currently lack effective treatments. The latest data highlights the significant potential of neflamapimod to slow disease progression and improve patient outcomes. In the extension phase of the study, neflamapimod demonstrated a meaningful clinical effect, outperforming the control group on key measures like the Clinical Dementia Rating Sum of Boxes, CDR-SB. Participants receiving the new formulation of the drug, new capsules, showed a 0.73-point improvement in CDR-SB compared to those on the older capsules. For patients with lower levels of a specific biomarker, the improvement was even more impressive, with a 0.81-point improvement. Both changes are considered clinically meaningful. What's more, the percentage of participants who experienced clinically meaningful worsening was significantly lower in the new capsules group compared to both the old capsules and placebo groups. Additionally, the data showed improvements on several secondary measures, including cognitive function and neuropsychiatric symptoms, further bolstering the drug's potential. These promising results will be presented at the International Conference on Alzheimer's and Parkinson's Disease in early April, fueling investor optimism about neflamapimod's potential to change the treatment landscape for neurodegenerative diseases. The stock's 36% jump reflects the excitement surrounding the drug's progress, and as more data emerges, CervoMed's prospects are looking increasingly bright. Our review on ALMS. Alumis Inc, a clinical stage biopharmaceutical company, just saw a 35% surge in its stock price, and it's no surprise why. The company is making some big strides in the world of immune-mediated diseases, with a particular focus on tyrosine kinase 2, TYK2, inhibitors. Alumis is developing two key molecules, ESK-001 and A005, that have the potential to change the game in treating conditions like plaque psoriasis, lupus, uveitis, and even neuroinflammatory and neurodegenerative diseases. ESK-001 is a second-generation TYK2 inhibitor designed to maximize target inhibition while keeping tolerability in check. It's being evaluated for its potential to treat a range of autoimmune conditions, making it a promising treatment option for patients who need better alternatives. Meanwhile, A005 is a CNS-penetrant version of a TYK2 inhibitor, aimed at tackling neuroinflammatory diseases and offering hope for patients with conditions like multiple sclerosis or even Alzheimer's. The company is also building a robust pipeline of molecules, all informed by its data analytics platform, which is helping identify new therapeutic targets for immune-mediated diseases. Their approach is backed by strong genetic data, suggesting that TYK2 inhibition could have a major impact, especially within the central nervous system. With its pipeline showing great promise and strong potential in both autoimmune and CNS conditions, investors are clearly taking notice. The 35% jump today reflects the excitement surrounding Alumis' progress in what's becoming a very competitive space. There's a lot of optimism about how these TYK2 inhibitors could transform treatment options in the coming years. Our review on AZI, Autozi Internet Technology Global Limited, a company specializing in automotive lifecycle services, is seeing some significant momentum, with its stock jumping 25% today. This surge comes as the company continues to expand its three key business segments. They're driving growth through new car sales, particularly parallel imported cars and new energy vehicles. As the market for electric and alternative fuel vehicles continues to rise, Autozi is in a solid position to benefit from that trend. On the parts and accessories side, Autozi is shifting its model, moving from just dealing with auto parts dealers to establishing more direct connections with local MBS stores. This upgrade should improve efficiency and widen its customer base. The company's range of products, from lubricants to batteries and brake pads, offers strong potential for consistent sales as vehicle maintenance remains a key market need. The company's automotive insurance services are also making waves, providing everything from repair services to claims processing and insurance intermediary solutions. This diversified approach positions Autozi as a comprehensive player in the automotive sector, which might explain today's stock surge. Investors are clearly reacting positively to the potential for sustained growth across these interconnected business lines. It's a solid sign that Autozi strategies are resonating in the market. Our review on SCLX, Scilex Holding Company, a firm that's focused on non-opioid pain management, is having a strong day on the market, with its stock up 25%. The company's product lineup is targeted at treating both acute and chronic pain, and it's clear that investors are taking notice of its potential. Silex's commercial products like Zeat-Lido, a topical lidocaine treatment for post-herpetic neuralgia, and Gloperba, an oral treatment for gout flare-ups, are already carving out niches in their respective markets. Additionally, Elixib, which is designed as a first-line treatment for acute migraines, is another product with strong potential, especially as migraine treatments continue to be a high-demand area. Today's stock jump could also be influenced by Boro Capital's recent report, which maintains a buy rating on the company, despite lowering the price target from $22 to $18. Even with the adjusted target, the positive outlook shows confidence in Silex's growing product portfolio and its ability to address critical pain management needs without the reliance on opioids. Overall, it seems like investors are buying into Silex's long-term potential, with its strong pipeline and expanding product offerings. Today's surge might be a sign that confidence in the company is on the rise, even with some minor adjustments in valuation. Our review on DSY, Big Tree Cloud Holdings Ltd, a China-based company, experienced a solid 23% increase in its stock today. The company specializes in the development and sales of personal care products, particularly targeting modern, health-conscious consumers. Their product range includes feminine hygiene products like sterilized feminine pads and menstrual pants, as well as body care items such as shampoo, body wash, facial masks, and creams. With a growing presence on e-commerce platforms, Big Tree Cloud is expanding its reach and further boosting its brand by licensing its name and logo to third-party commercial stores. The stock's rise could be a sign that investors are optimistic about the company's ability to tap into the growing demand for health and wellness products, and its strong positioning in the competitive e-commerce landscape. Our review on MCRP, Micropolis Holding Company, based in the UAE, is seeing a 22% spike in its stock today, and it's not hard to see why. The company, through its subsidiary Micropolis Digital Development, specializes in autonomous mobile robots, AMRs, which are making waves in several industries. These robots, from surveillance patrols to road sweepers and logistic solutions, are designed to function without human intervention, opening the door to a range of applications. especially in security, hospitality, and logistics. Micropolis is pushing the envelope with its flagship products, which include customizable AMRs capable of everything from surveillance to direct human-robot collaboration. With operations focused on the GCC region, particularly the UAE and Saudi Arabia, investors seem to be recognizing the growth potential of a company positioned at the intersection of robotics and automation. The stock jump could be a sign that investors are optimistic about its market potential, particularly with increasing demand for autonomous solutions across multiple sectors. Please subscribe, give the video a like, and watch more from our playlist. Thanks.